What's going on, believers? Guys, today I'm going to talk to you about the market. I'm going to give you a little piece of information that you may not know. If you don't know it, then this is going to affect you. This is important for you to need. This is on a need to know basis, and you, as my friend and an investor, you need to know. This is not financial advice, but I'm always right. I can't wait till Friday. Everybody's getting sideways. All right, true believers, the market's at $1.725 trillion right now. That's up 3% to the previous day, and we're looking at a volume of $106 billion, and that's money coming in based on this math. So that's a pretty good thing, and we're starting to see that up in the 24-hour windows. Cadena, Cosmos, all the favorites. The blockchains continue to do very well in that short-term period of time, but we've got some things that are happening in the next little while that are really going to predicate whether or not this market starts to take off, or whether we are going to get a little bit more dip on our dip, or whatever you call it. All right, so guys, this is very important. The Federal Reserve meeting Tuesday and Wednesday is the big event for markets in the week ahead, with investors hoping for more guidance on the central bank's plan to raise interest rates. Earnings season is in full swing, with about half of the Dow stocks reporting, and reports expected from the biggest market cap stocks, Apple and Microsoft. There is some important economic data in the week ahead, including the fourth quarter GDP and the personal consumption expenditure inflation data. So what we're going to find on the 25th, the 26th, 27th, so we're going to start to find out where we are in terms of interest going up, and we're going to see what the Federal Reserve plans on doing. Now, it has been said that interest rates will go up in March. And that's not really a great thing for any of these markets, but it gives you some time. However, the Fed could very well meet and say, you know what, we're going to move this up, and we're going to start the interest rates now because they believe that that's going to create a recovery in the market. And the reason for that is, we look right here, and it says, it was a painful week on Wall Street, with the NASDAQ slumping 7.6% for the week, its worst performance since March of 2020. The S&P ended the week at 43.97, down 5.7, is now 8.7 from its January 4 high. The NASDAQ has fallen 15.5% from its high and is off to its worst start to the year through the first 14 trading days since 2008, according to FactSet. Now, what happened in 2008? That is when the housing bubble crashed. So we're in the air right now where there's a lot of nervous sentiment. So, we might have to sit back and twiddle our thumbs for a little while if this rate hike comes early. If it doesn't, then it's smooth sailing. It's not going to be great, but it's going to be smooth sailing. Then people are going to get their taxes. They're going to put their money in. You're going to start seeing a little bit of a bump going on. But it's going to take just a second for these markets to reset. Now, there's a lot of things that are going on, and let's talk about those real quick. All right, guys, there's two things that are working against the markets right now. One is that the Federal Reserve is about to get really deep and really hard into raising interest rates. Now, when that happens, then the stock market's going to go down. There's no two ways about it. That's just the way that it is. It's not a sustained thing. The sell-offs, are going to happen from time to time. It's just a healthy market. That's why, even though I make fun of and I mock the bears all the time, they're a necessary evil in this market because it creates a healthy market. Now, the other thing that is going to start to cause an issue is bond yield going up. The bond yield was raised on a 10-year from 1.53 to 1.75 just recently. Now, that doesn't seem like much, or that may not feel like much, but if it continues to go up and you continue to see this nice little rise in it, then guess what that means? That means that people who are in the business of risking money, who have a lot of money, they're going to decide not to risk as much money, and they're going to put it into bonds because they're going to get a guaranteed return, whereas in the stock market, they may or may not get that same level of return on that same level of money in that period of time. So while it sounds silly, bonds are a way for these guys to hedge with their money and make something where nothing exists. So they don't have the risk. They don't have to worry about the stock market tanking. They don't have to worry about the crypto market. And that spills over to us. So there are things that are working against us right now. So here's what's really going to happen. We're going to have a little bit of pain at points. We're having a little bit of pain right now. Everybody wants to see a nice, healthy market driving upwards, but we're not getting that. What we're getting is a lot of false starting, a lot of sideways action, and that is because investor enthusiasm is way down in the crypto space. It's way down in the stock space. It's way down everywhere. People are nervous because the debt to income ratio in China is 263% right now. In the United States, is 123% right now. We are just leveraging ourselves on debt. Evergrande is going to collapse at some point. Something in America might collapse at some point. We are a house of cards, and that is why Bitcoin is an important commodity. That is why these other cryptos are important commodities. We have to have a store of wealth that is not controlled by the US government or the Chinese government or the government, period. That being the case, there are still regulations. There's going to be a tightening of regulations in the crypto market. You can see it across the world, whether it be China banning cryptocurrency for the 11th time this January, or Russia now banning cryptocurrency and crypto mining, and the Kosovo region also doing the same. You're starting to see a lot of different regions who are worried about their energy supply, cutting off mining. Mining is going to have to go green. That's what Elon said a year ago. Now, here we are a year later, and instead of going green, everything moved over. The amount of green changed a little bit. It's actually up. I believe the number was about 13%. So it's up 13%, but that still leaves a lot of fossil fuels being burned at an enormous amount. And that doesn't even consider all of the other crypto that are being mined as well. They're using those resources. So we're in a situation where we are going to experience a little bit of pain. We're experiencing a little bit of burn. But you guys, if you've been here for a year or more, you've already been through a pain. And there's a lot of you out here that have bought the top of everything, and you're feeling really bad about the crypto market right now. But you know what? If you can forget about your money, if you can just lay it to the side for a little while, and you can just imagine that it's going to get better, and understand that it's going to get better, and that you don't need to stare at the market, you just close your eyes for a little while. Then when you wake up, you're going to find out that the market has gone back up and that you are now making a nice profit. Guys, that's my time. Before the end here, we are looking at different things. I'm always looking at different things, and I'm going to give you one play that I think is probably very important for you right about now, because that market cap is incredibly low. The use case on this thing is incredibly high, and it's VRA. If you are not in VRA, which is trading at about 2 cents right now, if you're not in VRA, then I got a feeling that you might be making a very big mistake. Not too long ago, it was trading at 9 cents. It's at 2 cents right now. This is the kind of dip that gives you an opportunity to buy into something for a life-changing opportunity, because this one, if it goes 100x with an extreme use case, which we'll talk about, I think, tomorrow, but with an extreme use case, VRA is primed to make a lot of people millionaires overnight. Guys, that's my time. This was not financial advice, but I'm always right.
I'm looking for the good life, good life. Sitting on top of the world, I wanna be shining.